The JSE has come under fire and is headed for a legal showdown with the Competition Commission next year. Africa's largest bourse is accused of breaching the country's antitrust law. It's alleged to have starved smaller rival A2X of trading volumes to maintain its dominance. The Commission referred the case to the Competition Tribunal after a 3-year investigation triggered by an A2X complaint in 2022. A2X says the JSE engaged in exclusionary conduct to slow its growth in the secondary trading market, and the watchdogs asked the tribunal to fine the JSE up to 10% of its revenue, among other measures. The JSE has denied the claims, saying it will challenge the findings. Strong, that's how Vodacom's described its half-year performance. The telecoms operator had posted a near 14% rise in service revenue and a 32% jump in headline earnings per share. It's pointed to a stellar showing in Egypt and stable performance in South Africa. CEO Shamil Jusub says the results highlight the group's resilience, supported by a more stable economic backdrop and the continued expansion of its digital and financial services business. Vodacom's lifted its dividend for the period by just over 15%. Shoprite kept up its growth momentum into the new financial year. The retailer says sales rose 8% in the first quarter. Now, that performance was supported by solid gains in its South African supermarket operations, where selling price inflation remained at 1.4%, well below national food inflation. Sales outside the country, meanwhile, grew nearly 13%, and Shoprite opened 81 new stores during the quarter, most of them in South Africa. Omnia has delivered higher half-year profit. Headline earnings per share for the period rose 11%, helped by strong performances from its agriculture and mining divisions. Those units face several challenges, including a prolonged supplier shutdown, adverse climate conditions, and trade and currency volatility. The groups ended the period with a net cash balance of 695 million rand and says it's optimistic about demand into the second half as favorable agronomic conditions and new mining contracts support growth. Sibanye-Stillwater's long-running legal battle with Appian Capital Advisory has come to an end. The miners struck a 3.7 billion rand out-of-court settlement deal with the London-based firm, and that relates to its withdrawal from a 2022 deal to buy 2 of Appian's Brazilian mines. The payout is roughly equal to Sibanye's SA gold EBITDA in the September quarter. Sibanye CEO Richard Stewart is optimistic about the agreement, putting an end to any further legal processes. He says the settlement provides certainty for the group and its stakeholders, removing a market overhang of close to 4 years. Raubex has reported a softer first half. The group's operating profit fell nearly 29% as margins came under pressure. That was mainly due to its Australian operations. Headline earnings per share declined 14%, and Raubex has slashed its dividend by a similar margin. But the company's order book climbed to just over 30 billion rand during the period, marking an 8% increase. CEO Felicia Msiza says the results remain solid despite that margin pressure, with a resilient balance sheet and growing pipeline supporting longer-term prospects. Telkom expects its first half profit to double. The group says headline earnings per share from continuing operations could surge to over 300 cents. It cited one-off expenses in the previous period with 568 million rand. Those relate to the after-tax impact of the derecognition loss of the Telkom Retirement Fund and restructuring costs. Telkom set to open its books next week. PPC is eyeing higher interim profit. South Africa's largest cement producer says headline earnings per share could increase by up to 19%. And that's despite taking a hit from unrealized foreign exchange losses on contracts tied to its new Western Cape cement plant. The company says it's hedged against the rand weakness to limit the dollar-based cost of the project. When excluding those currency effects, PPC says adjusted earnings could be as much as 36%. In international news, Pfizer, the U.S. pharma giant, has sealed a $10 billion acquisition of obesity drug developer Metsera, ending a bruising bidding slowdown with Danish rival Novo Nordisk. Let's take a look at this package report for more.
US drug maker Pfizer has clinched a $10 billion deal for obesity drug developer Metsera. It ended the biotech bidding war with Danish rival Novo Nordisk, which announced it would exit the race. Metsera accepted a sweetened offer from Pfizer late Friday. It cited US antitrust risks in Novo's bid that it had previously called superior. Novo said in a statement that it believed its offer structure was compliant with antitrust laws. Metsera's drugs are projected to reach $5 billion in peak sales, and this win hands Pfizer away into the lucrative obesity drug market, even if Metsera's treatments remain years away from hitting shelves. It marks a blow for Novo as it tries to claw back lost ground against US rival Eli Lilly. The Danish drug maker later said it's advancing its own pipeline of treatment options for obesity, and that it would continue to assess opportunities for business development and acquisitions. Pfizer said it expects to close the merger soon after Metsera's November the 13th shareholder meeting.
Meanwhile, Diageo announced that former Tesco chief Dave Lewis is their new CEO, concluding a months-long hunt and bringing an outsider to guide the world's biggest spirits maker through a tough stretch for the drinks sector. Here's more detail.
Diageo appointed former Tesco boss Dave Lewis as its CEO on Monday. It ends a months-long search for the world's largest spirits maker. It's turned to an outsider to steer it through a challenging period for the drinks industry. 60-year-old Lewis will join Diageo at the start of next year and will be tasked with turning around the Johnnie Walker whiskey and Guinness beer maker. Last week, it downgraded its sales and profit outlook for fiscal 2026, while its shares are around a near-decade low. But they jumped on news of Lewis's appointment and were headed for their biggest one-day percentage gain in 5 years. Lewis was CEO of UK supermarket group Tesco for 6 years before leaving in 2020. He also spent 3 decades at consumer giant Unilever. There he earned the nickname Drastic Dave after fixing businesses through cost-cutting and innovative marketing. He left Tesco after transforming the UK's largest supermarket group and reinforcing its position as the clear market leader.